Lately, I've been getting a lot of questions asking me how to properly read the COT data, so the commitment of traders. So that is exactly what I will try to do in this video, give you a full insight on what you're actually supposed to be looking for when you're looking at the COT data. So without further ado, let's get straight in the video. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel and I will see you in the video. To explain how you're supposed to be using COT data, what I will do is I will take the full analysis that we had performed on GBP CHF last week and I will explain exactly how you're supposed to be using the COT data, so the commitment of traders, which is what the biggest banks and institutions are doing in the market, and I will show you exactly how we used this data on the pound and on the CHF to understand that the market was very near to providing the move to the upside that then the market actually did provide. And by the way, I will link the previous analysis also in the description, so you can go and check it out and see that actually we did expect the market to give us this move to the upside. So I will use the analysis that we had performed on this pair, which now I will also quickly recap, to explain why we wanted to see the move to the upside and how you're supposed to be reading the data to actually understand if a pair is supposed to be making a move to the upside or to the downside. Now, what the data is basically the positioning of the biggest banks and institutions in the market. So basically the biggest speculators in the market. How are they positioned and how are their orders changing in time? And obviously this gives you an advantage over your competition in the market because you are trading with the institutional order flow and not against them, as most retail traders actually do. So let's first quickly recap what we said in our previous analysis on GBP CHF. Now, from a technical perspective, what we said here was that clearly the market had reached a very strong structure area from a monthly perspective. In fact, on the monthly here, we had very strong demand all across this zone. The market was acting here as very strong demand, again, demand here, again, demand here. And obviously the market had tested multiple times this zone here and we expected a rejection to the upside. Specifically, if we check this structure of the market, we could see that the market had broken above the previous structure. Which is a quick trick that you can use to identify this structure. Just go down on a line chart. And if you go down on a line chart, you will quickly understand that the previous support is here. Now on a line chart, you see the closes of the market and the monthly closes are very, very important. So if you see on the monthly time frame that you have a monthly close here and that monthly close is now broken to the upside, that monthly close will be acting as support. And in fact, in our previous analysis, which by the way I will link in the description, we said that after a retest of this level, we expected this candle to make the move to the upside because we had monthly support as the market had already closed above this structure. Going down on the weekly, what did we say? Now on the weekly, we simply said the market has created a W formation. After a W formation, you want to see the market make a retracement to the neckline, so the previous resistance, now turn support, and then create a continuation to the upside. So that is the reason for which from here we wanted to see the market give us this move to the upside to complete this impulse correction and impulse pattern to the upside and reject this previous resistance, now turn support. And from here, we expected this move to the upside. That is exactly what the market did. And on the daily, what did we say? And then we will go down to the COT data. On the daily, we clearly said here we have very strong daily structure. In fact, we have previous daily resistance that the market broke to the upside and was turn support, broke back down, turn resistance, broke back up, turn support with this inverted head and shoulders, and we expected this move to the upside. And definitely that is exactly what the market did. This is currently what we had from a technical perspective, okay? So clearly technicals were all bullish. Now, if you have all the technicals bullish, can you just be looking for the long? Obviously not. Because first of all, you need proper confirmations on the 4 hours. Second of all, you need to check what the biggest banks and institutions are doing to confirm your view. So let's go and see what we had from a COT perspective. Now, if we go and see what we had on the pound, okay, what we can see. Now, first of all, when you are looking up the COT data, what you have to check that is very, very important is the net positions. Now, the net positions is longs minus shorts, okay? And it helps you understand how are hedge funds shifting their positioning. Now, keep in mind that they always, most of the times, hedge, okay? So if they add longs, they usually also, many funds actually are always hedging. So they will also add some shorts. So overall, you have to check the net positions to see how are the positions shifting? Are they shifting to the positive side or to the negative side? And here on the pound, what we could see is that clearly they were shifting to the positive side, meaning that net positions were clearly increasing. In fact, we went from minus 25K net positions, then minus 14, minus 2, and then we went to the positive side, plus 6, and now plus 5, plus 5K. Meaning that basically we went from having more shorts than longs from an institutional perspective with 64K shorts and 39K longs to having more longs than shorts, so 54K longs and 47K shorts. And in fact, as you can see, they were adding longs and closing thousands of shorts. Now, if you see institutions adding thousands of longs and closing thousands of shorts during a retracement, as we had on this chart, because if you remember on the weekly, we were having a move to the downside. If you see them add longs during the move to the downside, you definitely expect the market to make a continuation to the upside. Actually, what I will do, I will take the COT version that is directly on the chart, so I will better explain. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, as we were seeing here, basically what was happening inside of this weekly retracement, okay? Inside of this weekly retracement here, institutions were adding all these longs, okay? They were adding thousands of long positions, as we can see here, plus 6.2, plus 2K, plus 6.6K, and at the same time closing thousands of shorts. If during a retracement you see this, you definitely expect a continuation to the upside, okay? You definitely expect it. And if we go and see what we had from a CHF perspective, what we can see. Now on the CHF, we can see that at the same time, net positions had increased, okay? Because we went from 1K all the way up to 17K, meaning that clearly institutions were shifting their positioning to the positive side, which is something that you do want to see if you want to look for a long on GBP CHF. Because if you're looking for a long on GBP CHF, you're actually selling the CHF. But if CHF is strong, you don't want to be selling the CHF. However, what you could see in the latest report is that they had started to shift their positioning to the negative side. And in fact, with the new report that just came out, we can see that net positions decreased again because we went from 17K to 14K and now 11K. But at the time, we only had this 17 to 14. And clearly, we could see that with the last report, they had basically closed 2.3K longs and opened almost 400 shorts. So they had started taking their profits on all the longs that they had added and started to add some shorts, which is exactly what you expect for a move to the upside. Because if all the technicals are bullish and you see that institutions are actually buying the pound and selling the CHF, you definitely expect the move to the upside. So that is why basically it is very, very important to always check the COT data and see if it is showing the same thing that you see from a technical perspective, because technicals here were extremely clear. And you can go and check out the previous analysis in the description for that. So this is one quick thing that you always have to check when it comes to COT data. Net positions, and you have to see if you're adding longs or adding shorts. Now, there is one very important thing to consider here. Here we were speaking about what is happening during a retracement. So if, just to put this clear, if during a retracement, institutions are adding longs during a bearish retracement, obviously, institutions are adding longs and closing shorts, and at the same time on the other currency, they're doing the opposite, you definitely expect a continuation to the upside. On the other side, if during a move to the downside, they are not adding longs nor closing shorts and are actually adding more shorts, you definitely expect the structure to break to the downside, okay? This is very simple. On the other side, this is when it comes to continuation, because we spoke only about the fact how are you supposed to be approaching a market that is trending, okay? Like in this case, so during the retracement. But if the market is already creating the continuation to the upside, like in this case, okay, now that the market is already creating the move to the upside, what you have to look for on the COT data. Now, if the market is creating a continuation to the upside like this, if you are already in the move, you can continue to run the trade until you will see institutions clearly start shifting their positioning to the negative side. However, on the daily time frame, we have a strong impulse, and we know that here we have structure. So if the market this week will start giving us a retracement back inside of this area, we can be looking for a continuation to the upside. Why? Because on the CHF, we can see that net positions decreased even more. We went from 14 to 11K. So this means that they closed another 2.4K longs and opened 200 shorts. So what does it mean? It means that CHF, we can expect it to still be weak, meaning that if the market will show us a retracement, institutions will probably use this retracement to add more shorts on the CHF and create the continuation to the upside. And on the pound, what do we have? Now on the pound, we can see that net positions slightly decreased, but the increase of net positions was massive. We went from minus 25, so from a very negative number to a now positive number. So the increase is clear. Plus, this is a very, very important concept. If you look here, when we were looking for this long, were they adding longs and closing shorts? Yes, they were adding longs and closing shorts, adding longs, closing shorts, adding longs, closing shorts. Here, what do we see? You see the net positions decrease. However, you don't see them add longs and close shorts or actually open shorts and close longs. You don't see that. What do you see? You see closing of both longs and shorts more or less the same. So this is simply a situation in which they exited the market, both from the long side and to the short side. So nothing interesting, the bias didn't change. So if the market will give us a retracement inside of this area, what we will be doing this week with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries, because always remember, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But when it comes to entry, the best time frame is the 4 hours. So inside of this area, we will be monitoring price action on the 4 hours with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long for a good risk to reward and very good probabilities for the continuation to the upside if we will see proper bullish price action inside of this area, because as usual, you have to wait for proper confirmations on the 4 hours, because if when the market will retrace inside of this area, you won't see any bullish price action, it means that institutions are not adding longs on GBP CHF. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day, including the weekends. So I really suggest you go and check it out, and I will see you in